The 21st century has witnessed a seismic shift in the global economic landscape. The traditional powerhouses of the global economy, such as the United States and Western Europe, are now sharing the stage with emerging economies that are rapidly gaining influence and momentum. Emerging economies, once relegated to the periphery, are now driving global growth. These nations are experiencing unprecedented urbanization, industrialization, and technological advancement, which are propelling them to the forefront of the global economic stage. Among these rising powers, BRICS, an acronym for Brazil, Russia, India, China, and South Africa, stands out as a formidable force. These countries have formed a coalition that not only represents a significant portion of the world's population, but also a substantial share of global economic output. Together, these 5 nations account for a significant portion of the world's population, landmass, and economic output. Their combined GDP is a testament to their growing economic prowess and their ability to influence global markets and policies. Their growing clout is reshaping the geopolitical order and challenging the long-standing dominance of the West. The BRICS nations are not just economic powerhouses, they are also becoming key players in international diplomacy and global governance. The BRICS nations are united by their shared aspiration for a more equitable and multipolar world. They advocate for a global order where power and resources are more evenly distributed and where the voices of developing nations are heard and respected. They seek to reform existing global institutions, such as the International Monetary Fund and the World Bank, to better reflect their interests and concerns. These institutions, which have long been dominated by Western powers, are now being called upon to adapt to the changing global dynamics. Their collective rise has profound implications for global trade, investment, and finance. The BRICS nations are not only major exporters and importers, but also significant investors in global markets. Their economic policies and decisions have a ripple effect that is felt across the world. It also heralds a new era of South-South cooperation, where developing countries are forging stronger economic ties among themselves. This cooperation is fostering a sense of solidarity and mutual support as these nations work together to achieve common goals and overcome shared challenges. The BRICS nations are also at the forefront of innovation and sustainable development. From cutting-edge technology hubs to ambitious renewable energy projects, these countries are setting new standards and leading by example in the quest for a sustainable future. Education and research are other areas where the BRICS nations are making significant strides. By investing in education and fostering a culture of research and development, they are building the foundation for long-term economic growth and prosperity. Cultural exchange and mutual understanding are also key components of the BRICS partnership. Through cultural festivals, academic exchanges, and collaborative projects, these nations are strengthening their bonds and promoting a sense of global community. As the BRICS nations continue to rise, they are not only reshaping the global economic order, but also paving the way for a more inclusive and interconnected world. Their journey is a testament to the power of collaboration and the potential for a brighter future for all. One of the most ambitious initiatives undertaken by the BRICS bloc is the development of BRICS Pay, a new payment system envisioned as an alternative to the existing SWIFT network and the dominance of the US dollar. This innovative system aims to facilitate seamless transactions among BRICS nations, bypassing traditional financial intermediaries. This move reflects the growing desire among BRICS nations to reduce their reliance on the US dollar for international trade and financial transactions. By creating a unified payment system, BRICS countries hope to enhance their economic sovereignty and foster greater financial independence. BRICS Pay, if successful, could have far-reaching consequences for the global financial system. It could potentially reshape the landscape of international finance, offering a viable alternative to the current dollar-centric model. It has the potential to erode the influence of the US dollar and diminish the effectiveness of US-led sanctions. This shift could lead to a more multipolar financial world, where no single currency holds overwhelming dominance. This prospect has naturally generated considerable interest and scrutiny from policymakers, economists, and financial experts worldwide. They are closely monitoring the development of BRICS Pay, analyzing its potential impacts, and debating its feasibility and long-term implications. As the world watches, the success or failure of BRICS Pay could signal a significant shift in the global economic order. It represents not just a technological innovation, but a strategic move towards a more balanced and diversified global financial system. At its core, BRICS Pay aims to facilitate cross-border transactions in the local currencies of its member countries. This means businesses and individuals within the BRICS bloc could potentially conduct trade and make payments directly in their respective currencies, bypassing the need for conversion into US dollars. This approach promises to streamline cross-border payments, reduce transaction costs, and mitigate exchange rate risks for businesses operating within the BRICS economies. By promoting the use of local currencies, BRICS Pay could also enhance the autonomy of its member states in international finance. A BRICS Pay represents a significant departure from the current global financial architecture, which heavily relies on the SWIFT network for international payments. The SWIFT system, established in the 1970s, has long been the backbone of global financial transactions and the US dollar as the primary reserve currency. This reliance on the dollar has created a financial ecosystem where the US holds significant sway over global markets. SWIFT, a messaging system that connects banks worldwide, ensures that transactions are secure and efficient. However, it plays a crucial role in facilitating cross-border transactions, making it indispensable for international trade and finance. However, it has been criticized for its perceived Western bias and the control it gives Western countries over global financial flows. This system's susceptibility to geopolitical influence means that countries can be excluded from it as a form of economic sanction, which has led to calls for a more neutral system. The dominance of the US dollar, while offering certain advantages such as stability and liquidity, also exposes other countries to the risks associated with US economic policies. When the US makes economic decisions, the ripple effects are felt worldwide, and fluctuations in the value of the dollar can lead to economic instability in other nations. This interconnectedness can be both a strength and a vulnerability. BRICS Pay, by offering an alternative system, aims to mitigate these risks. It seeks to provide a more balanced and equitable financial landscape, which could potentially reduce this dependency on the US dollar and the SWIFT network. By incorporating a diverse range of currencies and decentralized financial systems, BRICS Pay could foster a more multipolar financial order, promoting global financial cooperation and reducing the dominance of any single currency or country. The current status of BRICS Pay progress and challenges. While the concept of BRICS Pay has generated significant buzz, its development and implementation remain a work in progress. There is no official launch date yet, and numerous technical, regulatory, and political challenges need to be addressed before it can become fully operational. Despite these hurdles, some progress has been made. Pilot projects and technical discussions among member states are ongoing. A key focus area is ensuring interoperability between the different national payment systems within the BRICS bloc. Potential benefits of BRICS Pay towards financial sovereignty. The successful implementation of BRICS Pay could yield several advantages for its member countries. First, it could enhance their financial sovereignty by reducing their reliance on the US dollar and Western-dominated financial institutions. This would give them greater control over their monetary policies and reduce their vulnerability to external economic shocks. Second, BRICS Pay could boost intra-BRICS trade and investment by making cross-border transactions more efficient and cost-effective. This could further integrate their economies and strengthen their collective bargaining power on the global stage. Obstacles and uncertainties, regulatory hurdles, and infrastructure gaps. Despite its potential benefits, BRICS Pay faces significant obstacles. Harmonizing regulations and technical standards across 5 diverse economies with varying levels of financial development is a daunting task. Building the necessary infrastructure, including robust digital payment systems and interbank connectivity, will require significant investment and coordination. Moreover, the potential reaction of established financial players, including the US and its allies, remains uncertain and could pose further challenges. Global implications. Reshaping the financial landscape. The emergence of BRICS Pay, even if not immediately successful, symbolizes a broader shift in the global financial order. It reflects the growing dissatisfaction with the existing system and the desire for a more multipolar and equitable arrangement. The success of BRICS Pay could encourage other countries to explore alternative payment systems and reduce their dependence on the US dollar. This could eventually lead to a fragmentation of the global financial system, with multiple currency blocks and payment networks operating in parallel. Conclusion: BRICS Pay and the future of global finance. BRICS Pay remains a work in progress, facing significant challenges and uncertainties. Its success is far from guaranteed. However, its emergence signifies the changing dynamics of the global financial system and the growing desire for greater autonomy among emerging economies. Whether BRICS Pay ultimately revolutionizes global finance or not, it highlights the need for a more inclusive and representative system that caters to the needs and aspirations of all nations. The coming years will be crucial in determining the future trajectory of BRICS Pay and its potential impact on the global financial landscape.